So at the end of this video, you're going to learn how to find your draw liquidity on any USD pair using DXY correlation. You're going to learn how to get your daily bias easily with few simple rules to follow. You're going to learn how to choose the best USD pair to trade at the moment after you've understood what DXY is doing. We have many USD pairs, but then there are going to be different price actions, and the one that's going to perform the best during your session, you're going to find out. You're going to learn how to get fire entry and exits and be done for the day. One shot, one kill. Let's get into it. Now, listen carefully. So when price got into this place, you would consider this as another block, of course, right? So if you refine that place to the 4 hours, it's an LVG. Today I use my phone to trade, so I guess that's why I didn't even notice. So here's an LVG, right? Good. So on the 15, where did price enter? Okay, on the 15, that you consider this as liquidity sweep because it went above this high. So it's a mitigation, right? It's a mitigation that is across multiple time frames. When you see things like this, just know that that particular thing is strong, very, very, very strong. So your DOL for the next move, it doesn't matter the day. Once it has happened like that, at least this day have passed, just so that this other day, then this will be down. Me, I was looking up. You know why I was looking at this? I was using my phone to analyze today. That's one disadvantage, guys. If you're analyzing, try to use your PC. If you're not at home, then you can just observe, because to be honest, if you use your phone, you will not just see certain. You don't know how it happens. When you look at your PC, you see it. So me, I did not see this mitigation at all. I never pay attention to it. I'll just pay attention to me like here's a low, right? And therefore, if it's a low, then there's supposed to be something that price will come for, like your draw is going to be higher for the next trading day. But because here has been mitigated properly, then this is the next draw. You understand? This is the next draw. So that was what price did during the London. That's correct. So now let's say in the London, this was your draw. Okay, forget New York first. London, this was your draw, right? So what would that be on Euro USD? Because if I saw that to be bearish, trust me, I would have catched this because it was kind of neat. But the buyers had one comma, and I'll show you the comma. That's based on the entry chart, but not DOL. But let's talk about the DOL first. So let's talk about the previous days. I will always know whether the 4 hour had a high first. I want to know if this was a proper high. From then you figure out whether our price is going to go higher or not, right? So we have this place to happen. So that was the NFP move on Friday. So let's see. Let's mark it so I can know. Maybe the links that supersedes it. Okay, let's use the blue line first. So now we created this high. If you follow the structure on 15, this, right? This. We made this deep low, we made this high. So until price takes out this low before we would have a high. Price did not do that. So therefore, there is no established 4 hour high yet. What's the rule? When there is no established 4 hour high yet, your draw for the next trading day or any is bullish. That's your draw. In as much as that shock has not happened, we are working with this mentality of the market is kind of straight like this. You feel me? And that's what you're working with. That's what you're working with. So the market is gonna draw to higher external levels. So if you check Euro USD, there will be definitely higher levels, right? Levels like this. I know price has not drawn there yet, but it will definitely do that. Maybe tomorrow. No. But then we'll see. So levels like this is your target. I told you don't hold trades to those targets. You just trade towards them because the volume might not be enough to get market there. So today we don't have any 4 hour high, so we cannot trade lower. We cannot have lower DOLs. Okay, take notes. So yeah, taking it. So that's why you bought. So in as much as you're doing higher, you need a bullish what entry, and a bullish entry. This is your London session. This is blue side. So look at price run liquidity here, right? Run around liquidity here. What's the next thing? You verify on the 15. I think this is where it stops interesting me again. From that side, it stops interesting me on Euro USD swears like you get. It's from that time that, because I would price run here with this, and I can't see any serious POI to take off here. So I just looked at it and just ignored. You get, if not, I didn't really get that a very good POI of 15. I'll go, if I find my chop, I'll catch this move. But even for buys, I cannot hold Euro USD simple, right? So let's look at GB USD if you have been able to catch any buy. So let's look at it. I don't think some people is like rubbish too. So let's see. So it's obvious that there was no 4-hour high registered the previous Friday. Like, it's very obvious that one. I don't need to tell you. So you know your draw is higher and not lower if you must trade, and the closest external high is this. So you trade towards it. So where is your how you going to place your entry model now? So yes, we actually ran this place, but I think it closed a bit on that red flag for you. I know there are liquidity grabs that close a bit on the I know. Does it fit my psychology? No, I don't like it. My own must be a sweep. See, let me tell you guys something. Please take this in very seriously. I want to say now. It might disturb you, it might shake your psychology a bit. But take it into consideration, because you will hear traders speak, you would see Twitter posts, you see YouTube posts. Don't go and feel like they are doing anything too different, especially when you're doing ICT. Now, do you know this thing that you see as market structure? Everybody learns it differently. This is normal higher low that has been existing, but ICT came to call it different names. Okay? You say that this place is a buy side, and this place is a buy side also. And then when price takes out a buy side, price reprices to a fair value gap or an internal range liquidity, other blocks fair value gaps. Okay, so what he's basically saying that the market does two things: either runs to a high or runs to a fair value gap. That thing that he's saying that sounds complicated is simple: high, price return to POI goes. That's the same thing. But now when price runs this place, it must not be with a wick. This is a full-blown BOS, but it's still a run. But you have only one confirmation to know if it will reprice back to fair value gap. One confirmation. What's the confirmation? The lower time frame chop is the confirmation that shows you that okay, it's going to work, do it. If it doesn't do it, then price will just keep going higher. So this is the logic that you have installed in your brain. Okay. And if you come to the markets and price has mitigated something here properly across lower time frames, and you come to the markets, your next draw is here. You should never ever trade for fail this, because you're trying to predict that here will fail. You can't do that. Instead, you trade when you're seeing is the next draw. So it's very simple. Like, I don't know whether it's me that it's just simple for, but there's nothing hard about this thing. It's very, very simple. It's following the same principles. It's just like it's kind of confusing when it's forming. But practice makes perfect, the more you practice. So you see this thing, it's supposed to be pretty draw for some people, but I don't like it. I like my pretty draw for candle to close and move. It gives me the confidence. If it doesn't, I don't want. Or maybe over some months and years after now, I might force myself to like it. Now even the 15 minutes, look how it is. I don't like it. I don't like how it looks like. Yes. I know you speak. Let me just finish. I don't like how it just make sure you write down your equation, but I don't forget. So I don't like how it looks. So that's why EU and GU, I don't trade them today. But they are clear buys. Now, there's something I learned, though Gideon is already doing it. Gideon does not use DXY. And I just realized that if you don't use DXY, nothing will happen to you. You just have to be very smart. You understand? If you don't use DXY, you can trade all these bets independently, nothing goes wrong. But you have to be very careful. But am I telling you not to use DXY? No, use it. Why am I saying so? I think I realized now, if DXY was bearish, just like I just saw now, my phone, I did not see something, so I was like, okay, it's bullish, right? That's why I said looking for the short gold. If DSY was bearish and then gold still sold today, don't you think they're behaving independently different? Like, because some people now will say DSY is bearish, then they start looking for ways to buy gold and see how you get stopped out. You keep looking for buys, you keep smashing your stop loss. So I looked at the gold from a wrong DSY reading and I still got it. Meaning, and if I came to this gold market and looked at it without any DXY, I'll still get it. Following the same principle. Now let's look at the 4 hours. So when we came to the charts, we are around, see this candle here. When I came to look for DOL, I think I was around this candle. Literally. So let's pick 15. Yes, Asian was around this side. Literally, right? So I knew that okay, this is an established 4-hour high. See now, we have broken this, so it's clear. You see, it's clear that what do we want to do next? We want to retrace to internal range liquidity, which is FG and another. This line is for rejection blocks. I don't know, rejection blocks sometimes work, so I use it as okay, pay attention to this big wick here. And once it's big like this, the market will run to 50% of it. So they won't have to be scared. I think every day I learn, trust me. I'm just teaching guys and I'm improving. Also, I'm not a master of the market. When you see big inefficiency gaps like this, like a week is like an inefficiency too, according to ICT, right? And 50% of it, that one you should use as your DOL when you see very long weeks like this. 50% of it is where price will like mostly get likely can react from. But me, I choose here. So maybe my TP would have been longer, but I'll just stick to 2 hours for now. So why did I mark this place here? Yes, I marked it so that price gets to it, I'll be alert. But then I didn't take it that seriously as my proper DOL. Why? Because if you refine it to the 15 minutes, is useless on it. That place is useless on 15 minutes. See, it's not significant. You see this other block, but whenever a week comes and cover this other block like this, bro, it's so useless to me. I don't like it, right? At all. So I just didn't take it seriously. So, but I am asking just in case. But then you see price reacted a bit and then boom, post everywhere. So see how gold is simple. If you check it from the daily chart, you know that okay, we broke this daily high, and after breaking a daily high, what happens? We keep going up. There's only one thing that makes us know that okay, we are ready to retrace to point of interest like it's on the daily. Only one thing that makes it happen. What's it? If 4 hours break structure to bearish, if 4 hours comes and start doing something like this, breaks here. Not breaking here. If 4 hours come and start breaking here, already that's close to the dip. See here. Let's see if that high was a really high before. Let's see, because I want to check something. Let's see. Closings. It didn't lead to any 15 minutes drop. It doesn't. Like, so let's take out this place. For me to take it seriously, but it didn't. So that's why I don't take this as a high. So if I don't take this as a high, I don't take this as a low, because this low did not break any high. So for 4 hours of flip bearish, maybe something like this will have to happen. Something like this will have to happen. Then say okay, that flip bearish, you know. So when that kind of thing happens, then we'll know that okay, daily is ready to retrace or ready to reverse. Okay, so that's how it happens. So that's for gold. So let's talk about NZD USD picture. So NZD USD slimy, and I think I caused it, but then see the same principle. I still follow the same thing I'm doing. So these are my structures on NU in case you want to copy. Understand? Looking at NU too. But their spreads are wide. I don't like the pair. Their spreads is wide. I don't even know why. Maybe it's because today is, I don't know. But the spreads are wide. I don't like it. It can make you risk more than you intended if you're not careful. So this was daily low, high, price broke this. Okay, so this is a high too, okay, red. So then from here all the way to price in here, we are very from the daily, not. And then price has retraced to these levels, run these liquidities on the daily, which is like a POI, makes a lot of sense, right? So it's not bad if you're anticipating price to break lower from there. But that I don't base my analysis like that from the daily. No, I don't do that. I just know that okay, we are bearish, right? So I'm following the 4-hour trend, right, to know what is going on. Most importantly. But then I think this ICT will drop to this level, but then that's how it happens. Just a normal bearish market, break down, retrace to POI, and then here looks like the next jump. But then we'll see. Then 4 hours, fine. What's happening in 4 hours? We're bullish, right? All the way up here. This high is established, definitely, obviously. You see it. They established. I say hi. Take a look at it. You see that? See the break? See the established as a high. So how was that cut off guard? So what's the entry model? Yes, we are looking down because it's established as a high. Our draw is lower. That's obviously the case. What POI are we looking for was our drop? Nothing serious here. So I was looking at this move. Get. So how did I get my entry? How did I get focused? So if I remove this for a while, this was my entry. This is my order block. One I was trying to use. So there's a rule, I used this rule before, but I just forgot. If you have an order block like this with the same candle, this is an order block, and then this is a candle that dropped, and then the immediate next candle is going back to the order block, and it's most likely failed. I think Gideon knows we're doing this in 2023. Yeah. If price immediately, this is another block, this next candle immediately retraces like this to just cast. It's just a pattern that I've seen happen multiple times. So beware. So I think what I would have used is this one. I don't know, I did not use it before, but it looked retraced. So I would have used the rejection version of it, the rejection block version of it. And that's where price went to. But this one has been used. So rejection block. So 15 minutes charts. What the 15 minutes charts do there? 15 minutes charts was also a rejection block, and then price enter. So from here you start looking for a 5 minutes chop, right? So 5 minutes chop did not show on time till I think at this point it showed up. So at this point it showed up. Then what I do is if there's no FVG here, I try to keep 3 minutes if there's an FVG there. So there was. So I think this was the best time I would have taken that trade. I'll just take it here. So there's 4 pips stop loss. I want that 14.45, and it got so kind. That would have been another bad for me. So that's the correction of my mistake, right? So in case you want to learn. So I have to send it back to how it used to be for journaling purposes. I've not journaled yet. I have to journal and write down the mistake. You guys see that I make mistake too because I'm human, right? So that was how I was not able to catch it. But then you see the bias is the same. So what did you learn today? First of all, yes, your DXY, don't use your DXY reading to force things from other pairs. Example, the DXY is telling you bullish. Okay, no problem. Look at EU. If EU is bullish too, GU is bullish. What do? Look for another pair that is bearish. You understand? And not because, like, don't use your DXY bias to just force another pair. Okay, because DXY is bullish. Then no. Look at that pair. Look at the structure. Look at everything. If it matches with that opposite bias, if it does not match, let it be. And even I read DXY wrongly with my phone. And even I said forcing it and say, okay, it's bullish, therefore every exercise USD bearish. That's how train sell everywhere. I see sell. Every other block I see just has a sell. What happened to me? You collect me.